Here we go. Matt Anderson. Today's social climate, August 24th, 2025. Here we go. What do we want to talk about today? Well, what I'm going to talk about today, as I've had a general theme over the last, 6-7 episodes, is the Federal Reserve is going to lower interest rates. Isn't that wonderful, ladies and gentlemen? They're going to promise to give you more cheap capital so that we could go out and we could buy houses and cars and everything that we can't afford. Why? Because the capital's cheap. This is wonderful. This is to sustain an economy with trillions of dollars of malinvestments. Okay? Right now, they're fighting inflation and they're saying that they won the battle on inflation when they haven't won the battle on inflation, not even close. But they're declaring victory and they're moving forward and they're going to lower rates. We had a little bit of a drama queen, Donald Trump, along with Jay Powell, the dog and pony show, the good cop, bad cop role that they usually play, that they played last time. So now we are going to get cheap capital, cheap money, to sustain this overvalued stock market and overvalued markets. Most of them are all overvalued. So how do we play this, folks? Well, how do we play it? Well, we could play this with commodities, hard assets, gold, silver stocks, copper stocks, oil stocks, and that's the place to be right now. There's probably a little bit of room to run for the AI theme out there. There's a little bit of room left there, but the majority of the room is going to be run in the commodity hard asset sector right now, in my opinion, as this inflationary tidal wave ensues. Now, probably what's going to happen is they're going to lower rates, which is going to drive the inflationary prices back up and probably crash the bond market, to some extent. We're going to see yields rise in anticipation for more inflation, and this is going to put pressure on the stock market. But they're not predicting this. They think past is not prologue, because last time the Fed lowered interest rates, which wasn't too long ago, the 30-year bond and the 10-year bond all went down in value, which subsequently raised yields. So we could expect higher interest rates, despite their feeble attempts to lower interest rates, due to the inflationary environment that hasn't been quelled yet. They started an inflationary forest fire after COVID-19, and they somewhat quelled some of the inflationary fires by raising interest rates. But the fire is not out yet, and there's plenty of tinder out there that can light on fire again. So they're making a grave mistake. Donald Trump is demanding this, and he's getting what he wants, because it's all a big charade. Donald Trump is just part of the charade, with the globalist bankers really controlling the whole situation out there. So, again, hard assets, commodities, gold and silver, oil and gas is the place to be. And that's exactly where I'm going to be. I'm not going to play the general theme that's already overvalued, which is AI and all the Bitcoin and cryptos and all that nonsense. There's still a lot of room for these hard commodities to rise. Again, a lot of the valuations have been squeezed out into AI, tech, Bitcoin, crypto, and all the rest. The valuations of the hard asset commodity stocks, natural resources to be more exact, still have a lot of wiggle room to run. So that is the place where I'm going to be. That is the place where I think is the biggest alpha on your return on investment, and that's the where we want to play it. So gold stocks, gold call options on quality gold companies, quality gold miners is the place to be. Oil and gas, which has been suppressed, has lots of room to run higher. That's the place to be too. Any kind of commodity stocks, copper, all those themes, platinum, they're all going to go up. But in the long run, they're going to go up even more. But in the short term, they're going to go up really fast. And that's where you want to play this lowered interest rate saga. This is where you want to be. This is the biggest bang for your buck. This is where it's going to be. Now, they're going to attempt to reinflate this whole stock market malinvestment bubble, but I think they're going to be too late. I think Trump is correct when he says too late, pal. I think they're too late. They're going to somewhat sort of inflate it for a little while, maybe the next 6 months or so, and then the whole thing's going to come unraveled. Now, when it comes unraveled, I'm going to give it 6 months. When it comes unraveled, it's going to take the commodity stocks, which I'm just recommended right now, and all those hard assets down with it. But they're not going to crash as hard as the AI bubble and the Bitcoin bubble and all that. They'll crash. They'll lose some value. But they're not going to lose as much value as all the Magnificent 7 or Magnificent 10, whatever the heck they are. They're not going to lose as much value as Bitcoin's going to lose and all that. So, but we will talk about this later on when we start to see the deflationary winds and the inflationary, stagflationary winds all occurring simultaneously. We are going to see a stock market correction, but now is probably not the time. I'm going to give it another 6 months before we see a gigantic correction, even though as a hedge I am shorting the S&P 500. It's a small portion of money. It's only a couple grand, but that's what I'm doing. That's my insurance policy in case this whole thing blows up. But I expect at some point in time, 6 months, 6 to 9 months from now, the whole stock market just to crater. Too late, pal, it's too late. This is going to buy some time, though. So as they lower interest rates, commodity stocks are going to skyrocket, and then that's going to become bubblicious, and then the whole thing is just going to, much like, you know what, I'm finding all this information. I'm regurgitating what happened in 2008 because I was there. I remember it. I'm 48 years old, and I was in the early part of my investing career back in 2008. And I remember that the commodity stocks started going up crazy before the crash. Gold started skyrocketing. Everything was skyrocketing. Oil was skyrocketing. And it was all going up along with the crazed stocks at the time in the housing market and all that. The commodity stocks were going up with the big bubble stocks. So they all went up. Commodities had further to go. They went further to go, and then they all kind of crashed together. And that's exactly what precisely is going to happen this time. So, the bubble will continue a little longer in the stock market, but the alpha is not in the general stock market. The alpha is in the hard asset market, commodity, natural resource market. That's where we're going to see the biggest gains made for the next 6 to 9 months. And then you're going to see some sort of correction or crash or 50% discount on the stock market. But then after the reactionary Fed, due to the crash of the stock market and all the massive bubbles around the world, they'll reinflate like no tomorrow, which will drive commodities back up even higher than where they're going to go right now. So the place to be is commodities, 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 natural resources, and that's where we want to be, ladies and gentlemen. And I will be back next week with another video. I hope you guys are doing well, and the saga continues. The Donald Trump saga, the J-Pal saga, the Wall Street saga, it all continues. It's a great time to be alive. We're going to see some fireworks, and a lot of the investments that we're going to make money in are these speculative natural resource stocks. That is the place to be. Let's take the next 6 to 9 months, own these things, sell them out, watch the crash unfold, buy back at the bottom of the market, and watch them go even higher than before. This is a great time. We're going to make lots of money. Hang in there. Peace out.